Howdy, everyone. This is Tyler Coates along with my two co-hosts for this week's version of the Honest Analysts live stream. And we are coming to you at the normal time, 7:30 Eastern time on Thursday evening with plenty to talk about. The price has definitely been moving and shaking as it's been likened to do. We've been getting some good times to stream, and this might be another one as Bitcoin is right now peaking at 48,882, and that is going to give it a lot of room to not going to need to go very far to get to 50,000. I mean, we are only $1,500 away from 50,000, which would be a monumental price, which makes you wonder, is it going to be able to get there on the first try? Is it going to be able to smash right through? Is it maybe going to, something coming to my mind right now is back when we first tested 5,000 and it got up to like 49.50 and then had a major correction after a big run up. So a lot can happen. And the title of today's show is, we're going to be taking a look at, if it's ready to get to 50,000, and if so, if it's ready to break through and sustain that price, which it has been doing basically at each level along the way so far. So we'll be excited to jump into some charts before we went live today. The topic of movies came up, and I like to share some good movies that I think are rich with good morals and also very entertaining. So I want to give a quick shout out to Bull Durham. Anybody who has seen that already, I think it's time for a rewatch. I just watched it again myself, and I mean, it is absolute classic. I would put it probably my top 5 movies all time, and especially if you grew up playing a lot of baseball and you were really steeped in that baseball culture, really hits home on a lot of levels. And as well as his other sports movies, White Men Can't Jump and Tin Cup, bunch of classics out there. So if you are going to be looking for a movie to watch, those are a couple that I would highly recommend. And today we're going to do it a little bit different because I've got a very special announcement to make. And so we're going to do our introductions and then send it back over to me, and I will start with my introduction and then provide my analysis before sending it back to Joe and Fibbo for what they're looking at. So Fibbo, how are you doing? How's your week going?
Actually, it's doing pretty well. Besides the weather, living in ice age out here in Kentucky, we've been getting a lot of ice. So I've been worried about the power going out like every hour or so over the last couple of days. Because I think we got like a half an inch of ice on everything. So it's been kind of nasty. So, but other than that, it gives me more time to trade because there's nowhere to go. So I've been kind of doing a little bit more trading.
What if the power does go out? Do you have backup energy?
I have a little bit, not to where I can power my whole house again.
But you can power your laptop?
Oh yeah, no, I can. Yeah, I got stuff.
About the router?
Yeah, stuff like that I can power up, but not much.
Yeah.
But hopefully it doesn't go out. So that's that. I don't think it will. The weather's not bad at the moment, so I think we're good. But yeah, no, I'm doing pretty well. Rock and roll. Got a good buy-in today at right basically on the low. I mean, nailed it. So I'm pretty happy at the moment.
Well, Fibbo doing what Fibbo does. So that's very good to hear and brings up an important topic. I think it's very important to have some sort of plan for if you're trading a lot and you've got some positions in play. What happens if the internet goes out or the power goes out? This happened to me more times than I can count on one hand, and therefore I've got a very specific contingent plan to where as soon as it starts thundering, I make sure that my laptop's plugged in and my phone's plugged in, because my phone can be a hotspot for as long as it is, alive. And then as long as my laptop is charged up good, that gives me a good number of hours. And then I've got a converter in my car, so I can go just turn on my car and then plug in the laptop into the car, got heat going and everything like that. And that has saved me more than once. And the best part about the plan is I got to know exactly where my headlamp is. Once all the lights go out and everything and it's pitch black, you got to be able to find your way to where the headlamp is in the pitch black. So that's, you know, a couple pro tips for you guys out there. Anybody who's been watching me for a while, and it's really fun to think back when I first started streaming with Tyler Jenks. Every other week his power would just go out. I mean, it was like ridiculous how often it would happen. We'd just be in the middle of the stream and it just cut out. And he just was in an area with really bad internet. So those of you that are probably already have some plans. Those of you that aren't, you know, things are happening, and it's a good time just to, you know, not prep like a crazy person, but to prepare, like, you know, for these important things. So Joe, how are you prepped for internet going out?
Well, I do the phone thing. I got a VPN on my phone. I use TorGuard VPN, and then I just, I mean, my phone's kind of like a tablet. It opens up, you know, I got my tablet kind of stuff here. So I can, it's pretty much a computer. And of course I got batteries that'll charge this. So yeah, I mean, I've traded on the road, you know, I've traded in the car. I've traded fucking in the fucking green eggs and Sam type shit, you know, up in the trees and down in the fucking with the bees. You know what I mean? I like, I'll trade wherever if there's a good trade and I'm getting signals. You know, my contingency is always my phone. Run the VPN, get moving.
Yeah, I've done that too.
Yeah.
In the past. I try not to use the phone because it's kind of not the easiest thing in the world, but
not ideal. This is a contingency plan.
Yep.
But yeah, that's what I go to. Phone. I like the idea of a hotspot, but you know, just as a tech guy, I would say you're probably better off trading on your phone and saving all your battery for your phone than worrying about anything about a laptop. Especially if, you know, if you're actively trading, like, you know, I'm actually, you know, as we speak, I'm trying to get into longer trades, like hours, maybe 8 hours where I can sleep a whole night. I'm really trying to get into this mindset where I want to get into trades and stay into them longer. So yeah, you know, it's like the phone to me is important. If the power cuts out overnight and I got 5% left on my battery for whatever reason, I can open it up, run a VPN, put in a stop loss, and I can freaking walk away. No problem, no questions, no nothing. You know what I mean? It's just a seamless process for me. So I don't take the risk, and the phone is the number one thing you got, you know.
All right, well, we will sum it up with that, and I appreciate the input. With one more question that I have for you, I got to assume that I'm covered as long as I can buy gas when I plug in my laptop to my car and then have my phone plugged into my laptop. I've got
you can. I mean, you can definitely have a 6 setup, but for contingency purposes, my phone is enough. But I don't disagree with you. I mean, a good laptop, sure. You know, I would love a good laptop, but you know, I don't know enough about hotspots, what their point of failure is. You know, if there is one, you know, it could just be the 4G, whatever is your hotspot, and you're all good. To me, it's just, you know, in a contingency situation, I have one goal, and it's usually a pretty simple goal. I wouldn't be like even in market conditions like this, I wouldn't be actively trading during a power outage. Sure, there's lost opportunity, but you know, I'll take that any day over losing money. You know, getting liquidated or something like that. You know what I'm saying?
Absolutely. All right. Well, I will go ahead and take it over for an announcement that won't take too long. We really haven't shilled anything on the show here for a while, and I am definitely excited to share something that I've been working on for months on end now.
So we're going to hit 50,000 during the show, is what you're saying?
That would be beautiful. That would be a great way to kick it off.
No, go ahead.
And yeah, this is something that Fibbo's been excited about, as well as we have been putting our heads together on this ever since I went out to see him. Those of you that have been watching this show for a little bit probably saw some pictures that we shared, wearing no shirts and bandanas out on the disc golf course and eating some good steaks. So that was a heck of a trip. And one of the main reasons was to talk about this site. So I guess before getting into it, I just want to kind of give a little summary of the idea behind why it was built and why I'm excited about it. And that is going to be a website that I think is going to really improve upon what we have been doing in the Telegram group that has been available to those. It started as a private Telegram group for just if you bought the annual membership to EMASAR, you would get into the Eye of the Storm Telegram group, and there was a handful of us who were really spending a lot of time contributing charts and analysis in there, and it would get really clogged up and hard to follow. And you know, you'd go through there and there's a couple hundred posts a day, and it would be tricky to really keep it as segmented and get to the questions that we wanted as well, which really made me think back to kind of my beginning of the internet, which was a very similar chat room like we were using there on Telegram, which eventually evolved into a forum, which was much more effective for me to communicate with like-minded people and specifically learn a skill that I was really interested in learning. And that started for me on 2+2, which was a poker forum where all the online poker players went to play, to learn poker and to share, you know, analysis and brag or find a coach or things like this. And the forum worked very well. It's worked so well that it's still available today. Not available, it's still thriving. One of the best places, best communities for poker and learning how to play and just sharing, you know, thoughts with like-minded individuals, which I always found a lot of value from. So that was the whole thought process coming into this, was that we need to, a place to segment our analysis into, you know, separate threads where we can share individual analysis that people are wanting to follow, and then those people that want to say follow my analysis and not Fibbo's, or more likely the other way around, will be able to go ahead and do that. And this was something that talked with Joe about joining on board a while ago as well, but he's been busy and had a lot going on, and potentially he'll be able to share some of his order book analysis. That's definitely a vision that I have as well once you have time.
Just because I'm not streaming as much doesn't mean I'm stopping. You know, I just want to say that, like, I'm part of the team here.
Oh, absolutely. And I just hope that once you have a little bit more time, you'll be able to share all that great stuff that you have about the order book. Maybe start your own forum. I just remember talking to you a little bit ago and know that you're busy, so I didn't want you to feel, and I wanted the audience to know that, you know, you're not being left out or anything like that. And I didn't want you to feel any way like that. That won't be available at any time for you when you do have some time to really put that together. So this is the coming soon page for Alpha Analysis and .io. And this will be where I'm going to be getting back into doing a lot more videos. I'm going to be doing daily streams where basically the stuff that I'm going to be doing is going to be all for free. So that's something I'm really excited about. A lot of the stuff I feel like I would be able to charge for, sharing a lot about traders tool belt, investors tool belt, risk management, advanced, you know, risk management and dollar cost averaging tactics, trading on leverage versus trading on spot, you know, getting really in depth about a lot of these things, working hard on putting together a bunch of presentations and going to be putting that all out there for free. So I'm really excited to share a lot of this stuff with you. We've been working really, really hard on the EMASAR backtester. Actually, all this has been ready to go, and the backtester is the last thing that we have been waiting for to be ready. And we are working tirelessly to do our best to be diligent about making sure that it's ready and performing accurately, and while also being ready. So this is actually a delayed. We were wanting to launch last week, and still working on that. And if it doesn't turn out that the backtester excuse me, it will be ready by Saturday, then we will end up launching the site, and then that will be the you know, just top priority. But we've got everything else just ready to go, so we won't be pushing it off any longer. I've been sharing the tool that I put together, the FOMO Finder on Twitter a lot and here a lot. You hear me talking about the funding rates and the futures premium, which I will be looking at closely today. That will be available for free. And then public forum that I'll be doing, sharing a lot of charts. Fibbo is going to be doing his threshold theory in a private forum for those of you that have been following along with him and have not been in his Patreon group. Then you don't know what you're missing out on, and you should talk to some people that have been in it because they have all been very happy. So we're going to be very happy to have Fibbo on board, and he is planning on setting up a blog as well eventually. A lot more to come. Mark Wood is going to be doing a lot of charts on the forums, which I know a lot of you have gotten to know very well. So that'll be great for him to be able to contribute that as well. I just got a knot in my throat. I apologize here. And I am going to be doing a giveaway. So this will be summing this up. If you are interested in anything that I just talked about, you can sign up for the email updates, and it's going to be as minimal as possible and just trying to share valuable information as much as I can, and not showing anything that I don't believe in or I'm not working on myself. And as simple as cake, you don't even need an email confirmation. Just enter an email and subscribe, and you will be entered for a chance to win your choice of a EMASAR hoodie or a signed Hyperwave book. And once this gets launched, I will be planning on daily live streaming on the website starting on Monday, and going 6 days a week like I used to back in the good old days. So that is going to be something I'm really excited to get into. That's a really big commitment and something that is going to take a lot of energy, and it's something I've been looking forward to here for a while because I feel like the time is right, that people are needing it now more than ever. And that's why I'm kind of chomping at the bit to really put out some good stuff for risk management and for how to use some indicators that are free, and then also be showing how I analyze charts every day. So alphaanalysis.io, that is that's the wrong one. Let's see here. Now I'm just there we go. ALPHANALYSIS.io, and it'll take you right to the coming soon page here. And for those of you that have been not seeing me as much on Telegram, that is because I have been working my tail off over the last couple of months getting ready for this. And so moving forward, I will be transitioning my stuff from Telegram over to this forum and making that available for free. And we'll be excited to go from there and really offer a really good place for people to learn how to trade, as I know that Bitcoin is going to be getting a lot of people into that. So I need to go clear my throat. I thought I was going to be starting with the charts, but I keep getting something stuck in my throat. So I'm going to pass on over to my man Fibbo. Let us know what you think, and we'll be excited to see what you're looking at with Elliott waves.
Yeah. No, I'm first of all, I'm looking for, I'm disabled. I need to enable me, please. No, I'm looking forward to the website too. One of the things, that you're having problems with in the Telegram group, just like I am, is it just gets crowded, and a lot of people always ask for other coins and charts and stuff, and I hate putting it all in there because it just bogs it all down. So I just kind of kept it with Bitcoin only, and then when people request the charts, I DM them. So I can't wait to have it broken down into a forum setting. So it'd be kind of cool. I think it'll definitely help a lot. But let me get the screen going here. First of all, the hourly, what I've been looking for is a couple of different targets on the hour. The first one is just this trend line break that we had right here. If you take the rate of change from the lowest point up to the trend line here with the arrow, take that same rate of change to the top here. And I mark that as a minimum target. So whenever I do a trend line break like that, I always say it's a minimum. So it's like the first target. So maybe you take half profit or whatever, however you have your stuff set up. But the minimum target there is about 50,300 or so off this trend line break. And then another one that I was looking for was when you look back here, one of the extensions that I was looking at was when this made a new high back here, because this was a pretty big deal, getting up above the 40,000. And when so when you take these extensions up, the 300% is right there at 51.5, which matches up pretty daggone closely to the threshold or the extension on this one at the 400%. So when you draw the line across here, there's a target level at around that 51, basically 51.7 or so. And one thing that matches up nicely with that is on this hourly is I was just looking at just this break right here as like a little bit of a flag pattern. This one right here, you'll see it a little bit better on the 4 hour, but the movement here with a little bit of a flag pattern to the upside, right here at the break point when the market went down today and made that low right off this break point, that's where I bought, which was super nice. And it's been launching ever since. So I've been pretty excited about that one. So I was thinking that if this flag pattern was going to hold after this throwback to the break point, I think that we were going to go back to the upside. And when you measure this out using the fib trend extension, the one is pretty close to the minimum target, or the 100% retrace, or off the whole pattern. And then the range I like for a reversal is right there at the 127 to 141, and the top of that 141 matches that target from the upside. So my target's kind of been that 51, 52 area that I've been kind of looking for. Now, I mean, 50,000 is going to be a psychological round number. Like you said, we don't know how it's going to react when it gets there. So, it could go right up to 49.9 and then we crash 30%. You never know, but just based on the pattern here on the hourly, these are the areas that I'm kind of looking at, to the upside. Because basically right at this trend line break, we had a threshold where the ADX was a positive over positive on the hourly. We broke up into the bull zone right here, and it so happened to be right on a trend line also. So all of that together was a pretty nice support level for me from what I look at. And since the momentum's still with the bulls, I bought that dip because it just seemed like as price was coming down, the momentum was still with the bulls. It wasn't really gaining any momentum for the bears. So I kind of jumped in a little bit there. And I was just adding to positions that I've had already off of the 4 hour, because that's what I usually trade off of is the 4 hour here. And couple of things. There's the flag pattern I was talking about with the target here at the 300% off of this, off of the extension off of here, because right now I'm looking at this 47.8. If we get 4 or 3 consecutive candles above this 47.8 on the 4 hour, which we haven't yet. That's why I'm still thinking that this area needs to kind of bust through and get us above this what was resistance, or still acting as resistance, and it needs to turn to support. And if it does, that's where this 51.5 or so comes into play for that target to the upside. And then beyond that, we'll just have to see where it goes on all of that. But the way it's kind of acting is when this dipped down into this area, it was when you look at the shallow fibs. Let's see, we're 48.912 on the chart I'm looking at. The shallow fib was right here at 40. That's where I was looking for any types of major buying if it was ever going to dip down there. But when it dipped down into this area right in here and it wasn't building any bearish momentum, that's why when looking at the hourly, it was like a perfect spot for me to get in. So that's why I did. And so far it's held, and we'll have to see where it goes. But right now I'm still following the bullish zone on the 4 hour. First buy was back in here. and then a couple other buys on the way up. I'm averaging right now just above 40K on the average from down here, and the buys to the upside on this 4-hour break. So I'm going to keep watching this. So as long as it's 4 hours in the bull zone and we're moving to the upside and the shallow fib holds, even if it gets down to the shallow fibs and breaks, I'm still in the positive territory. So everything's working pretty good on this to the upside. So let's get this 50K and see how this market reacts. That's what I want to see, but we'll have to wait it out and see what happens. But the main thing I wanted to kind of show tonight was I wanted to get a little bit of bring out some Elliott wave just to either I use it for validation, but then again, there's a lot of people that gets pissed off when you look at Elliott wave because they think it's a bunch of jibber jabber. So I like bringing it up because it gets everybody's blood boiling sometimes. But no, the one thing I'm looking at on this, there's a lot on here, and I'll start back here at the beginning, but I've been looking at a lot of different patterns and trying to figure out the best fit for this Elliott wave, and it's been working for a while now. I've been kind of on the same wave pattern for the last almost like 6 months to a year. It's been kind of crazy, but the way back here, back in November of 19, I wasn't going to do all the markings from this point. It was basically, this was the end of this major move down to the downside. It got into that 3,100. And then it started this move to the upside right here. And the one with the parentheses is what I'm going to categorize as the intermediate trend. The major trend is, or the primary trend is the ones with the circle. So right now the intermediate trend with a 1 here, and it moved down to 2, and 2 was this kind of a little bit of a correction right here, maybe a little bit of a wedgie type looking thing, and then it popped up. So you got a 1, 2, and then it went up to a 3 here, but then this from 2 to 3 broke down into a 1, 2, 3, 4, 5 pattern to get this 3, and then it had a quick 1, 2, 3 to the downside here for 4, worked its way up to 5. So now that we hit this low on the 3,000 here, it went up to wave 1 on the primary trend, and then we had this nice little ABC correction back down to 3,800, and right where all of this broke down, and I'm not gonna show it all right here, but a lot of this was a threshold area, and basically it had a full retracement to the threshold to where you had this ABC correction. And with it not getting back down to that previous low was a pretty bullish signal that it held right in here, and it held the break point of the threshold and started off this way. So this was 2 right here off of 1 and 2. Now I think we're actually on the circle 2 here all the way up to circle 3 here. And I got the move up to here, and where the intermediate trend is 1 here, 2, and then then we're working on the 3, and this is where it really kind of depends on where this is going to end, on where the wave 4 on the intermediate trend here on the 3 to the 4 right here should come into play. Now, right now, if the high ends up being right where it's at, the shallow fib is at 33,558, and I believe that if you look back at some of the other charts I've had on the low, like this chart I did a long time ago, where that's for the high, this one's for the low. On the low, the timing of the lows here, if this pattern holds true on these lows, the low should be around in June of this year. And the low doesn't mean it's going back to 3,000. It's just a low off of what's happening off the move to the upside. So when you look at the pattern here, the low I would think would be the shallow fib area at around 33.5 in June. So if this is the high right now, 33.5 would be the area that I would look for the June low. So we would correct back, and that would probably be, let's see, get a little price range here. So if we did correct just from today, from the high down to 33.5, you're looking at a 32% correction, which makes sense with what a lot of times you see a 30%er on that. But a lot of these other things I'm showing is that this 54K area on the daily is that nice next level. And then of course, on these other ones we were looking at, we got basically around 52 on some of these. So up around in this, low to mid 50s, if it actually goes up to that point, which that's where I'm thinking that it should head, at least at this point in time for this third wave, or the third wave of the intermediate, which is broken down into the 1, 2, 3, 4, and then we're on the 5 to where we should hit the resistance or the target there. And if it hits this area, then the June 4 low, or the 4 here would be around 37K on the June low on there, and then it would work its way to the upside after that. And the upside to me would be, this is where it could, the upside for just the wave 3 right here is probably going to be up around the 61K area. And then you have a much larger correction into the primary trend down here, to where right now, if it actually goes to this level at the 61, the 38.2% level is right there at 40K. So I think you would drop from 60 down to 40 on this major correction. And then after that, you would have a move to the December high. And that's where this comes from on all of this timing chart. I had a nice inflection point on January 4th and called that correction pretty quickly. And then there was an inflection point to where the market went nuts after that, which is nice. But all of this timing on this in different time periods of looking at different things based on the halving, that puts us at December 27th of 21 to have the high post halving. I don't know what that number is going to be, but at least the timing on this, if this wave pattern holds true and we get a June low, pops up and gets wave 3, gets a nice correction, and then into December, I think it could be anywhere between. So what I would normally do, if this actually holds out and holds true, you want to do the extensions just like you would, like we did here. So if this gets up to, just say it gets up to the 61 on this, and then what you do is you take the extension, see it comes all the way down to 40, and then it would pop back up and make new highs. Then the December high to me could be anywhere really between 70K and really about 70 to 90,000, somewhere in there where the December high would be. So it could go even higher, but I mean, just based on the pattern, that's what I'm kind of looking at, is seeing where this could go. Now, of course, this can all break down and never work, and I wouldn't trade off of this, but I want to keep it as a verifier, because right now this move right here to the upside is still looking pretty decent to get us up to this level, which would give us the nice little third wave here, and then get a nice correction off of that. And it might only get to where we are today. It might get to 50K like you talked before. It might not even make it and find a big correction, and then we get back down into the lower levels after a while, and then get that, and hopefully get that low in that June time period, and then work our way to the upside. So I know there's a lot on this chart, and I know Elliott waves are kind of nuts sometimes, but I always use them as a verifier than anything else. And I also look at like the fib levels and everything. Like if you're looking at the fib retracement here off of this high right here, and then you go down to the 4 right at this point. Let's get the low in here. The 200%. See, right now we're testing this 47.4, and if we could get above this a few times, this is where that 200% comes into play, which is right up at this level. So that makes sense to me. If this breaks out and this becomes support, then that low to mid 50s comes into play as the final point of this wave, and then the correction can come in. Or if it wants to go really nuts and take us all the way to 60K, that would be great. All it's going to do is make the June low a little higher, which would be kind of nice. But right now all the fib levels are looking good. I'm not going to put them all on here, but when you look at different things, like when you look at like this low to the high here, right at this point at the 61.8% level, it held right here and tried to break. But the interesting thing is it popped back up, and when you look at it going the other direction on the fib from this from this one going this way. Let's see here. You can't get it to, got the magnet on there, so it kind of gets all kind of crazy. Right there, the high to the low here, this 61.8% level right in here. It tried to break, and then it popped back up to the 61.8% level, which kept this into the bearish area to the downside, which was a nice thing for this break of this little channel here. For A, went up, and then it held at the 61.8% level for B and dropped down for C, all the way to a full retracement from the threshold that I was looking at. And then now we're off to the races for wave 3, which is always not always, but wave 3 is typically the longest. It's never the shortest. Rule in Elliott wave is wave 3 is never the shortest. It can be shorter than one of the other ones, but it can't be the shortest out of all three of them, or out of 1, 3, and 5. So you had the 1, the 2, the 3 here, and then if we get a 4, and most likely when you have an ABC zigzag, there's a theory of alteration or kind of an inverse. Like when wave 2 is a zigzag pattern, wave 4 is typically a flat pattern. So once this makes a wave 5 or a wave 3 up here, then you can consolidate, which would give you like an ABC correction within a range instead of zigzagging way down. That's why I really like the 38.2% level on the flat pattern type deal there. Because this one was a zigzag, then this one should be flat. And another interesting thing is the theory of one lesser degree on fourth waves. So if this gets up to a wave 5 here, and say we get to 54, gets down to the fourth wave, and then it pops up to here, the primary wave should bring down to this level right here, the circle 4. But usually what happens is when you have a primary trend like that correct, it usually corrects back to one lesser degree. So this fourth wave here is an intermediate wave, which is the 1, 2, 3, 4, 5 of this wave 3, which is the primary. These 4s typically match up on the retracement. So if you had a June low at 37, most likely you're going to be pretty close to that on the primary breakdown. So far everything on pattern wise that I follow, that I've been following, has been working pretty well. So I know this is kind of crazy to a lot of people, but I use it to verify the fibs, and then I go back to my threshold theory. And if my threshold theory matches the patterns, it kind of gives a nice sense of, okay, it's kind of working. The buying interest is coming in where it should be. The selling interest is coming in where it should be, and kind of keeping the pattern going. So that's where I'm at. I know I'm doing a lot of talking, and hopefully, are we at 50K yet? Nope, not yet, but we're going to get there. And then that's about all I got for tonight. So any questions, comments, concerns?
Can I jump in with the?
Yeah, throw it out.
Oh shit. All right. Well, one thing that I wanted to observe while you were on the larger time scale was the back retest of not only your fib, but that diagonal line where you were.
Which one? The weekly or the
one that you were on before you flipped things? I think it was a green background.
This?
Yeah, maybe it was like an hourly or something. Try the hourly.
This is the hourly right here.
Yeah, so I loved that retest of that descending line. Like that was pretty much the top of the descending triangle, right? And then and you drew your arrow from where the bottom end of the descending triangle was. And that retest is exactly what I wanted to see if bullish operations were to continue. Now, that being said, your Elliott wave things throw me off a bit, because I think that since we are in a parabolic wave here, we kind of have to keep that structure. And your Elliott wave landings are basically at a point where we would have broken the parabolic trend and probably gone up to retest some sort of trend line up there and then failed, would be my guess if I was to look at the long-term picture play out that way. So that's my observation. Do you have any comment on like the parabolic nature of this run and the parabola or any of these accelerated trend lines being broken? I mean, I know that's kind of like hyperwave fractal stuff. Maybe Tyler has some.
I'm a little confused on what you're asking, but
So go to your Elliott wave one.
Yeah. But I mean, the Elliott wave is a daily, so it's a completely different
Yeah,
time frame.
so basically the parabolic trend will have been broken at that 3, it's still intact. At that 4 or any of those 4s, the parabolic trend has been broken on the pullback. And then that 5 would not be a test of the parabola anymore. It would be a soft test of something, maybe some sort of trend line.
Wait, no. When you say that the parabolic trend would be broken if it drops there, why would that be?
Because basically where your 1 and 2 little kind of descending wedge there is, that's kind of like the beginning of the parabolic run. We were going sideways and then we started accelerating quickly. And so I think that if we break a parabolic run, then Bitcoin has a tendency to get nuts in a bear market, at least short term. So I would think that it would be 4 would be a pretty ugly, so something like that. So 4 could hold, but the parabolic trend would be broken.
I don't know. I don't think so. Because like if this went up and came back and it intersected here, and this is June, right here. The intersection would be at 37, and this trend to the upside would still be intact.
Yeah, and that would be a soft check. But the
a break of that would be terrible.
Yeah, that's what I'm saying. Is I would basically anticipate that the acceleration after that trend line, where we really started to go, greater than, let's say, 45 degrees, and now we're kind of going more vertical, almost like a phase 4 kind of hyperwave fractal beginning. So I would say that probably to me means that 4 is certainly a target on a soft trend line, and I would be very bearish at a point like that. Bullish on maybe some trend line support, but bearish in general that a parabolic trend has been broken. So I think I can actually annotate on your screen. So let's draw the parabola like this, and so you'll see what I got going. So do you see that parabola that I just drew?
Yeah. And
if that gets broken, then this is the structure that breaks a lot of bull markets, like stuff like over here. This is the structure that breaks bull markets and brings us back to some serious retest zones. So I'd be very curious, because this to me would then be a soft trend line. This is your number one place to be looking for a trend to hold. Obviously, this isn't the cleanest line. I'm just trying to draw something here, scribble on a screen.
But I'm still confused, though, because if that trend line holds, I don't understand how the primary trend could be broken.
Because I think this is the primary trend.
I think there's a good argument to be made. There's got a lot more touch points, but Fibbo, one thing that's different and I think very effective about how he draws trend lines is how we're seeing now. He'll use the very beginning of the move and those first couple points, and then it will look weird at a time like this. But if it comes all the way back to that June low 4, which I've seen not on this high of time frame, but he's those people who've been paying attention see how he'll draw those very quickly as soon as the trend kind of turns, and then he doesn't adjust them later on. He just waits. So I can see both sides here, where Joe's drawing a trend line that's has much more touch points and is much closer to the price, and that's going to be a problem for him if that line breaks down, and I can see a lot of reasons.
Yeah, I see. No, I see if that trend line that he had drawn on there breaks down, then that's when the correction, or the 30% correction, happens. But it doesn't break the primary trend. It just starts a larger correction.
Yeah, I think it'll be a let's see what happens if it breaks anytime soon. I mean, and speaking of 50K, I definitely have something to show you up there. But I would just say that parabolic trends are one of my worst nightmares in Bitcoin, and to break it I don't like them. But it is a trend line. It is a solid looking zone to land. So I mean,
yeah, you're talking about
30% pullback.
Oh, hold on, I got that. I mean, if you're looking at
I mean, we pretty much accelerated.
If you're looking at this trend line, basically this whole area is bubble. Like it's a bubble. Like it's up too high because it's parabolic. So once it breaks this area, then it should drop down to this trend line.
Yeah, the same way that this was like that bubble break, and then we fell right into the initial trend line, and then we took off and started another acceleration.
Yeah, I mean, it all depends on when this breaks down, and if we hit this 37 or area earlier than June, then to me that will give us a much larger correction down to the 26 by June. But right now the pattern's still holding this upper area. So that's why I'm looking at it from a primary trend perspective. So when you go to this one here, and then you go down to 2, and then this trend line to me is 3. So as long as this can go, right now we're in this kind of parabola way that you're kind of talking about, and then if it breaks down to 4, it still has that intermediate trend to still get a 5 to create 3, which keeps us in this bullish trend all the way up. And then once
I see your point.
and then once this breaks, that's the big break, and then that's when you get the primary trend break to the downside, which could take us all the way down to who knows where. I mean, it could go all the way down to here or wherever, but it's this fourth wave is the scary shit for me. I don't know when that's going to happen, but right now the pattern's still holding to where this whole wave 3 can stay above this level, but even drop 30% and still stay on this move to the upside. But it's the break of this one that could get really scary to the downside and give us a bear market for a long time, or back and forth in this thing for a year, who knows what. So, but I know what you're saying. I get it, and it makes sense.
I think we're both kind of on the same page. Maybe I'm just a little bit more worried than you are about this parabolic break or something.
And the thing is like I follow this, but I don't trade off of this. I just use this as a validator. What I'm going to really be watching is this 4 hour. If this 4 hour breaks down into the bear zone down here, and the bears take over momentum, depending on when this is happening, if it breaks these levels, then what you do is you pop over to the daily and go, okay, is the daily still going? If it's when the daily breaks down, then we're in bear market. Like the 4 hour can break down, and that's going to say, okay, now the June low's coming into play. But if the daily breaks down, then that's when it could get really, really ugly. So to me, until this bull zone breaks down, the primary trend stays intact. When the 4 hour breaks down, then that's when that bubble that we were looking at on this one will break down, that kind of thing. So if the 4 hour breaks down into the bearish zone with momentum, that's when I think that trend line you had built in, that's when it's going to break them pretty hard. So I think we're on the same page. We're just kind of looking at it in a slightly different way.
No, I think we both agree. That's just what I wanted to talk to you about, and thanks for giving me the time. I think we're on the same page, and I think we both kind of have our violent breakdown zones, and clearly, we're in a bull market. Don't underestimate Bitcoin's irrationality in a bull market. That 5 or 3, could be higher. And yeah, I think we're on the same page. So I'll end there.
That's what stops are for, man. You know that.
Thanks for giving me the time.
No, that's a good question. No, it makes sense.
Why don't you keep it on over there? See if I was on mute. Yes, why don't you go ahead and share what you're seeing? I think you said you had something around 50, something like that, and sure you got some other stuff.
Well, hello everyone. Welcome back to the order book analysis. I myself have also been busy, and I know I haven't been streaming much, but I will not. I'll do everything I can to make an honest analyst stream with these two gentlemen here, wise gentlemen, I might add. Now, I have been playing a little bit. I've been waiting for the opportune moment. I've been more trying to bottom hunt and top hunt. And I'm not actually trying to top hunt nearly as much as I am trying to bottom hunt, because it seems like the market has clearly made a decision. But this was my last trade. I rode this pretty much to the all-time high now, up here actually. So we might have gone above that a little bit. Yeah. So I actually got out right at the right time. For my kind of trading, this is a good, let's see, 16 to what was that? Oh, that was like a day. Yeah, that was like a day. I'm trying to get into these longer term trades. And what had me there is I'm very interested. Let me get rid of some of these arrows. In this, the perpetual markets have been overwhelmingly bullish. A dual band confluence is obviously something I speak about regularly. Spot markets agreeing that it's a good buy zone, perpetual markets getting excited. That's fantastic. And not to mention, I think before that, if we go back a little bit further, you can see that we even had trend bias signals walking us up. Oh my goodness. I mean, dude, we're getting trend bias signals here, dog. Trend bias signals in this range. We ate about half of it. We probably came a little lower, you know, toward the bottom end of this horizontal 43,000. We didn't make it that far, but we got strong, consistent signals. This was a great buy zone to me.
Hey, Doug, you want to take a second to explain what the trend bias signals are?
Oh, yeah. So trend bias signals are basically, they're usually colored in yellow or gold, or even as much as ruby, or the ruby mine, as we call it, which is almost a sure thing, as close to one as I've seen in with order book analysis. But the trend bias is 5 to 10% distance from the actual price at the time that the candle is printed. So you notice I'm on a small time frame, 1 minute, so that I could see the evolution and growth of these signals, leading us into parabolic moves, following the move. So the trend bias signal is basically saying the trend is long. We have orders that are basically wick hunting, trying to catch those dips, and they're supporting the price. As price is supported, as we have orders stacked in the book, they're going to be there to catch these orders. And you can see this guy caught orders. These handful of guys caught orders. And even this handful of guys caught orders, and it stayed consistent. So we had a great buying opportunity with the dual band confluence as we were in all-time high territory. It's been a little spotty on spot markets, but the bulls in perps have been pretty damn serious about what's going on. Now, as we reach our first all-time high, we had some great sell signals. I mean, you know, maybe for some scalps, yeah, initially. I'm not, like I mentioned, I'm not looking for the short of a lifetime right now. I still think that, you know, Bitcoin is irrational to the upside. So I'm not going to spend my time daydreaming about my next short. I'm going to spend my time daydreaming about my next long until I'm proven wrong. I was proven wrong recently. And let's look at the daily where I was proven wrong. I was proven wrong here. And that's kind of why I wanted to bring this up on your screen too, Fibbo, is that test that we got on the hourly was pretty critical. I was pretty short expecting this descending triangle after having broken an accelerated trend to probably enter the apex of this range and mean a breakdown, you know, and I was wrong. So, you know, there's a lot that
this is the whole thing that I brought up last time, that breakouts of a descending triangle to the upside could be very, very violent. And that's what I was trying to talk about the last time, because that's what I was saying, like, they're not always bearish. They're built to be bearish.
If they break down short term, but we broke the hell out.
No, that was the whole point. Like, everybody that I was talking to was thinking that it was going to break to the downside because it's a bearish pattern, but it really isn't. Like, it's built to be bearish, but if it does break to the upside, it could be extremely bullish.
Definitely.
And that's the point I was trying to make.
I think
back when
that couldn't have been a better point, because that's 100% true. I was expecting us to break down, but we didn't. This meant
I'm just saying that because a lot of people were waiting for the dip to buy, and that's why I was saying that could be a little bit dangerous. I'm not talking about you. I'm talking about the people that were contacting me.
Sure, yeah.
Saying like, well, this is descending triangle, it's going to break to the downside. So they had their orders way below the triangle, which is fine. It could have broke to the downside. It could have been wrong. But I was just saying, I've seen a lot of these types of patterns break to the upside, more in traditional markets, not so much in Bitcoin, but in traditional markets, I see it a lot in the S&P for sure. But really in Bitcoin, it really hasn't happened very often, but Bitcoin's still very young. And I think bringing some of the traditional stuff into Bitcoin as it starts to mature and more people and more players come into the market, these patterns will start, you know, flipping out on people in different ways. But I mean, that's just the way I look at it, right or wrong. It was a breakout to the upside this time. It could break to the downside next time.
Exactly.
You know?
And the breakout to the upside meant get bullish, get, you know, I was worried about the bear trap, the bull trap. I was worried about all this, and then once we broke, it was time to shut the fuck up with my bearish shit and get bullish again. That's part of what a trader needs to do is say I was wrong, and then
No, but here's the question: did you see any big major change in the order book at that point, or no?
Oh,
what I saw was a tweet about Elon Musk or whatever. That's what I saw.
No, but I'm not talking about that. I'm talking about the retest back to that trend line because it fell right back to that point and then took off.
No,
So
it got to a point where I got stopped out and I took a couple days walking away from the market. And this is like my first trade that I've entered really since. I just did one of those things. You know what I mean? Walk away.
So post Elon candle was there anything in the order book that brought more buyer? Did you see anything in the order book at that point in time? That's what I'm trying to.
Yeah, I wish I had a better answer for you.
Okay.
The honest truth is,
because that's what I've been trying to look at the order book for, is if I'm seeing any difference or
this
patterns at breakouts like that.
This was Elon pump right here. Yeah, I mean, I won't forget this. We just shredded signals. Was I asleep? No, I mean, I wasn't trading. This looks like it might have been early hours my time.
Yeah, it was overnight, I think.
Yeah, it was a strong move, and it shredded resistance. This is all annihilation. And then we got the trend bias, and then we freaking kept going, so I can't say that I have much for you that I was watching.
I would just ask you if you had it off the top of your head.
I wish I could have been watching the walls break. I love watching walls break. I love observing how much of it was a stop loss, how much of it is FOMO buyers, and so on.
Yeah, it's not even that point. It's the retrace when it went back down to that level.
Did we even come back this far?
Yeah, no, it dropped back down.
We haven't yet. That was the first Elon pump where we had a full retrace. And that was a good top. I didn't take this was the first Elon pump.
That's the one that's what I'm talking about.
Yeah, this was
because it actually came back down.
Yeah, this one was a good short. I did partake in this one because I slept through most of it, and by the time I woke up, I think we were around here. So I remember there was something that I got in up here. I was just like, this is a weird little Twitter pump. This isn't gonna last long. But the second one, I was like, shit, this is gonna last. And he really went hard with Bitcoin and talked about buying it. That's a completely different level of FOMO. We had some trend bias signals against us, and they just got annihilated. They got annihilated. Oh my goodness, man. They got annihilated. Pure fucking mayhem. I'm glad I wasn't awake for this because I probably would have been stopped out. I probably would have been a pissed panda trying to short this. Thank goodness I wasn't aware of it. Now, up to current day, what's going on is we've pumped up into another area of steep resistance. We've had some great pullbacks. If you're looking for that scalp, I was about to press the trigger on this one. I just remember looking at these up here, we were at 88 and like 88 on 0 to 1 and 1 to 2.5 distance from the book. The book was stacked. And so this is the 50,000 wall that I have for you, because this basically got put into play at this range, $49,000. This was definitely in the 2.5 to 1 to 2.5% range. This was causing almost the entire ratio to be as steep as it was. So I'm thinking in my head, well, holy shit, if all we have is one wall, really, that's causing a signal to short, and perps are pretty bullish right now, I don't really want to bet against perps. Spot markets are pretty much wrong a lot of the time. Perp markets, they tend to follow runs a little bit too aggressively, but they don't tend to be wrong on stuff like this, especially on trend. Now, it has tightened up quite a bit. I mean, like we can't say that perps are an obvious a free throw or whatever, a slam dunk or whatever, right? Some baseball reference for you.
I mean, did it tighten up because of the funding rates, or did it just tighten up because other reasons?
Just because the distance moved. I mean, we probably annihilated a lot of orders in the book as a result of this kind of whipsawing. So that's going to mean that, you're seeing that bids are dropping, asks are remaining pretty constant. I maybe had a couple flips at some highs, but those were like over here. Now perps are starting to get bullish. because they're doubting the fact that this thing's going to be a price ceiling. So I'm kind of leaning with that right now, saying that I just watched us run through a lot of this shit all the way up to, what was it, 49,000? I saw that. In fact, I might have even had some, maybe I can go to 100,000, and I watched the wall get picked away a little bit. 49,000 flat. Maybe it's too late now. Yeah, it looks like it's too late. A little bit too much time has passed. But a lot of buyers were serious. A lot of buyers were very serious at those levels. So, and then we had a pullback. So that's pretty common. You know, fat finger buys tend to get put underwater pretty quick. I think it's to try to shake them out. But yeah, I like the resistance up here, but Bitcoin has been pretty much a resistance breaker of late, you know. So how much do I want to risk on a short when the bull trend is pretty strong right now? I just want to say that the order book is the order book. Technicals are technicals, and more people trade on technicals than they trade on the order book. So resistance means a lot to me, but if the technical picture is looking strong, then I gotta say that, you know, some of the sell side, like for example, the overall picture is bullish. I gotta say that these sell signals are a little less significant to me. Even trend bias signals got annihilated, and that doesn't happen very often.
Do you think that we're going to be able to get to 50,000 in the next week?
We definitely have resistance there. I would say in 7 days, I think, hell yeah. You know, right now I say, hell yeah. Look how this dip was bought, dude. I mean, it's pretty serious, and it came out with an all-time high off a dip buy, you know. So I think bulls are pretty aggressive, and they have every reason to be. We just reclaimed the operation. Bulls just came back in and said, we're fucking here, you know. So I'm not gonna freaking sleep on them bulls. I'm not gonna take a short. You know, right now, you know, I obviously Scalpy Joe doesn't do what he says he's gonna do, but you know, I just don't want to prioritize a short when we've made the decision. We broke the triangle. We went to the upside. The bull market is clearly intact. I feel like I would be a fool to pretend that I'm going to be the one that calls it top while Bitcoin is still FOMO long with Elon Musk buying 1.5 billion days ago. And who knows what's next? You know what I'm saying? So fundamentally, this is not a market that I want to fight when it's so bullish. I would rather look for those ideal dips and to be honest, go degen with low capital and freaking hope I catch a bottom. Redo that a couple times, maybe I do, and then pull the equity, let it be 100x basically, and then you let that trade ride, open another account, and use your trade capital to make another decision.
That sounds excellent. So we're already at an hour. I'm going to go ahead and take over.
Oh yeah. All right. Much love, everyone.
Give my analysis, and I appreciate you diving deep into the order book there.
That was good. That was good. Good stuff.
Okie dokie. I think I just needed I need a little nicotine. I think I'm sounding better now. So we'll go ahead and dive into EMASAR and see that we are here up testing the sky area, and this is an area that I pay very close attention to see if it can stay inside of this area. This close inside is a very big deal, and now it is turning resistance into support. And this is where we have seen some big moves. So that's what I was watching for here as we broke up in to this area and failed to support it here. That's where I start to target the 50 moving average, and it did not occur on many exchanges at all. There was, I guess, a bigger wick on Kraken than other exchanges, and we quickly here have reclaimed this area and are closing inside. So this is where it's, you know, really in a good spot for a big move up, opposed to we've been looking at this closely over the last week, a couple weeks. Here we've got it's moving down. The sky is moving down, and that's going to make it a much bigger area of resistance. And I would I expect it to take time to turn that area up before, like when we got here, I'm still saying, okay, we need to kind of consolidate up around here. I want to see some proof that it's ready to kind of turn this thing up and not just move back down. And then that's kind of what we got over that following 3 or 4 days, where it very much hung up in here, and then we had that pop up in there. So this is in a very good spot to turn a key level of resistance into support, and then potentially trend between the bottom of the sky and the moon.
Hey, Saul, when you get up to that area, I know the way I've kind of used this before, and I'm wondering if there's a way that you look at it. But when it first gets up there, it's typically a trim for me, like an area to possibly look like if it's matching up where some of my fib targets are, it might be a time to trim it and take some of the longs out. Is there something that you look for to negate the trim at that point in time, or no?
Well, it's a really good question, and the more I
Not an
look,
easy answer.
well, the more that I look to or feel like I should be negating the trim, the more often I'm like, shit, I should have sold here. Like the more I do that, the more I'm just not right usually. So I will do my best just to stick to, like you said, just trimming, taking some profit, and then put it in my back pocket and letting it ride, kind of like Joe was talking there at the end. Like he maybe set up a new sub account or something like this, whereas I just would now have some spot exposure that I did not have before in a less risky way. So yeah,
I've been using it. I trimmed when it hit, and my fib target hit the other day. And then I bought back on that hourly dip today. So that's what I've been kind of looking at. But I was just curious because I've been trying to find a good way of knowing to trim or not. I know it's a tough one.
It is a very tough one. And the one thing that I have been paying very close attention to is when this really starts to turn up and sustains an upward angle for a while, say 20 plus candles. That's when it really starts to be like, so this is kind of there's like a couple very, very common things that I see when you get a good buy signal on EMASAR, where it'll come up to the sky, and if you don't trim right away, then you miss it. That'll happen time and time again. And then when that doesn't happen, when you see this happen, like 50% of the time, or just like here's a good example. Sometimes it doesn't fall straight down, but it'll still kind of move down in a way that you miss the trim, and now you're kind of left hanging behind or whatever. It's a spot where if the sky is going to act as resistance, generally only a couple of candles are going to hang around there, and then it's going to move downwards. Here it got front ran a little bit, so that's when you get used to seeing that time and time again, and then instead of seeing that, you have kind of support moving up, and a lot of people, maybe like you were mentioning with the triangle, like a lot of people just kind of looking to buy back down in here around horizontal support, around the moving averages, and they just don't get the chance. And then it starts just creeping up, and we have the sky turning up. This is where I start to think, if I trim here and the next day the price is still here or higher, I really start thinking, maybe I should just kind of buy back where at the price I sold. It becomes pretty attractive because it didn't do what I have become expecting it to do, and for it to really sustain a move inside the sky, it's got to be angled upwards in bull markets. So let's go back here. We see that as it kind of here's a big move that occurred. You get through, let me zoom in a little bit. You kind of go ahead and move into this and kind of attempt to turn it into support. But as you are, I guess it's not the best example. As you're trying to turn into support, it's nice and angled up. And here, the whole time we're angled up, and it's failing to return to the 50 moving average. It's a spot where there's going to be a lot of people left behind that are going to start FOMOing in, or they're going to be caught in shorts trying to get out at reasonable prices, and they keep getting left behind and front ran. And when that happens, that's when the sky will kind of turn up, and whether or not it sticks in there or stays in there, just seeing it turn up and stick above the 50 is where I start thinking, okay, if I trimmed here and I didn't get a buy back, and now we're kind of back up in here, well, I've already got my trim, so I'm just going to kind of let the trend ride like Fibbo does so well. Okay, so here we are sticking up in here. 50 kind of, you know, hasn't gone back to test that for a while, so a lot of people looking to buy there maybe are now wondering what to do, and again, it happens. So that's a big deal. And the daily close that we just got was a very big deal. Is that the high? Yeah, that's the highest close ever. So we did have this big move here, which was damn near a $10,000 candle, and it's very, very important how you react after getting a big extended range candle. Often you'll immediately retrace it, and if you instead see support move up and you consolidate and fail to really have much of a correction downwards, that is where this starts to seem like this price is, you know, really looking like a real move opposed to just a head fake before a turnaround. That being said, I have been very concerned about, like the only thing that's concerning, which is a major concern to me, is the premium in the futures was up, I think the highest it's been this whole time, almost 8%. It was a problem to see with the funding rates at 0.15% every 8 hours. That's a big problem, and a lot of people are going to be selling it. And if it can sustain that, that's where you get these really crazy moves that with a lot of people kind of on the wrong side. And as Joe's a shorter term guy, and he is himself mentioning how he's not going to be, he's going to really staying away from shorts. I'm going to encourage anybody that's not a very, very proficient trader to just, you know, don't short the fastest appreciating asset in the history of humanity. If you start there, you're probably going to do a lot better than trying to get moves you missed out on. What'll happen is you miss out on this move, and you think that you can you know, catch it by shorting here and covering down in here, and then when you don't, that's what provides a lot of the rocket fuel for this upside. And no matter how crazy you think that is to short this, a lot of people shorted that and are now not knowing what to do. And that's how these markets work. So I would strongly encourage anybody who is not a very, very proficient trader, just stay away from shorting, and just think to yourself, how'd you do in the bear market in 2018? Did you buy every dip that just kept dipping further? Well, do not let yourself be the guy that sells every pump in a bull market because you think it's going to dip further than it does. Be the guy that bets with the trend. If you're going longer term stuff like Fibbo and I, bet with the trend. If you're going to be day trading, then you got to be, you know, you're doing it full time, and absolutely there's plenty that you can learn from Joe. And then also you're just, you know, going to make more money day trading, betting with the trend, and that's going to be the bottom line, as Joe himself is talking about. So
let's talk. Let me just comment on that. You know, as a scalper, you look at every single candle and you're like, why wasn't I in the top of this candle, and why was I not in the bottom of this candle? You know what I mean? You're looking at everything. So it's just about, you know, what I've found in the longest time scalping. Yeah, of course, I find tons of opportunities to short a bull market, and I was right about the bear trap, but, you know, I was wrong about the macro trend being in danger, right? But it's like you find the times, but your risk management and your capital exposure need to adjust according to the conditions of the market. So, you know, if I'm not looking for degen shorts as much as I'd be looking for degen longs. So I just want to say, even as a scalper, there's something that you need to have, which is a trend bias, you know, which is why I say there is some marriage of technicals and order book analysis. But just a side point. I'll please continue.
Yep, I appreciate it as always. So yeah, a big deal this close here. The only way it could have been better is if it closed above this wick, but still, definitely a big move. And I think that the market's kind of done some things that make it look ready for a potential move in either direction. We had these are 4-hour candles where you moved. Let's get one of these guys up. That's a 5% candle in 4 hours. That's what will be referred to as like a Darth Maul, where you get a big move with a wick on both sides. That's the type of thing that precedes breakouts a lot of the time, or breakdowns. When you have just a shakeout that takes out a 5% move, that's anybody trading on 20x leverage or above in either direction just got taken out. So whoever was on the right side of that, there's now some good fuel to move. And if the guys that bought it up were right, now the guys that just got taken out on their over leveraged positions are going to probably be trying to get back in and stuff like that. So that's a candle to pay attention to, and I definitely think that that's a big daily close. I was recently looking at this monthly candle, which had this really bad wick on top, and that was a main reason why I was very concerned about a bigger correction than happened. I was definitely in the camp of thinking the descending triangle was going to break down, and it was primarily because of this higher time frame candle, and then the bearish pattern developing on a significant time frame within that. Made me think we were probably in for a month longer correction or so. And then I also expect the wick to kind of get re-explored a little bit. Generally, you'll retest, these big wicks, like say something like this, you'll move back up into it, but the high would need to hold, otherwise it's invalidated. So that is now invalidated and super bullish. So when you can take out a wick like that, I mean, that is kind of like Fibbo was saying, breaking a descending triangle to the upside, having the strength to break through that and then continue like this, that is a big deal. So I was very much myself looking for a return to this trend line. We had not revisited this trend line, and once we broke down, let's see here, I think maybe like a daily, we had a nice trend line here that broke down, gave us a lower high. So that's when anywhere between these guys here is going to be pretty much no man's land for me. And that was where I was, having some significant orders set here, and also selling. We'll have to pull up the 4-hour chart to remember exactly in here off of this. So I was selling some in there and very happy at 30% of the exposure left on the table at a zero cost basis, and then started getting back in as we reclaimed this, and now I had some orders set here, 34 to 36. I was looking to buy in here, and that did not get filled, so I'm a little bit light on exposure. I would have liked to have a little bit more, but I am about 50% of my account is long crypto. I'm into some ETH as well, which it has recently created an all-time high, and anything that creates an all-time high is something that I'm interested in and will be looking to trade. So that is definitely where some of my money is at the time. And also Litecoin, I'll just throw it out there. Bitcoin and Ethereum make all-time highs. Litecoin, I think, is in a good spot to make a significant move, and we haven't really looked at anything else to Bitcoin, but it's a pattern that we've looked at a lot on this show, which would be the big W pattern, which basically is now confirming, if you ask me. So when you break through here and support it on a throwback, that's where This is very much a confirmed pattern, which would target the prior all-time high. And that is where I'm putting some money in now as well, and that will be very much dependent on Bitcoin. I mean, these markets are already coupling a little bit, but if Bitcoin really enters into a major correction, I would expect altcoins to follow. And the way that the market's decoupling is that Bitcoin is 2x its prior all-time high, and no altcoin is that, at least any that's been around since 2017. So I'm not into any alts for fundamental reasons, purely technical, and I'm not suggesting anybody buy those. I am just pointing to some to a signal and a pattern and whatnot. So,
Hey, Saul, before you, I don't know how much other stuff you're going to show, but is there any way you can look at Hyperwave for BTC? I don't know if you were going to do that or not, but
yeah,
if you could take a couple minutes, that'd be awesome.
I would love to, and thanks for asking. So here will be the short-term trend lines that I'm looking at. We've got this 4-hour bull trend line here, and now this bull flag, which has confirmed and taken out the high, which makes me think that it might not return to that. So I would be now looking to draw in a new trend line like so, and that's the 4-hour chart. And I did hear that the white chart is easier to view from viewer on YouTube. So hopefully that is the case for other people. If not, let me know, because I can go either way. Okay, so we've got our phase one. And here is the phase two that I was very much targeting for a return. That's
so we're still in phase two then.
Well, now that it didn't return, when you don't return to the phase two, when you don't return to a phase and you go ahead and create a new all-time high, that is when you can say that a new phase has started. So I was really looking for a retest of phase two, and that to kind of be the final, and then for a takeoff into phase three. But this has all of the makings, because the other thing I look at is for the prior channel resistance to turn into support, which happened very nicely. So we have resistance, support. So that basically checks the boxes for me. And now it would say that phase three is like this. And it's a really tricky one. This is it's getting to the point where I really don't like Hyperwave as a fit. I mean, it kind of, it works, but it's really not a good fit for a couple of reasons. One, the phase two is too steep of an angle. You want it from 0 degrees to 30 degrees. It takes off like this. I mentioned it before, there's very few that we've seen like that just takes off at such a steep angle. And like Tesla being one, to where it's not really a hyperwave. It's more of just it's just like even more bullish, because so here's the two things that are a problem for me, is that this angle is too steep for where this takes off, and then this angle is too similar. You need something we talk about in the book is very distinct angles. And that's not what this is. I mean, that is, you can barely even tell it's a different angle. And so when you've got something that is basically failing to return to phase two, but at the same time, the new phase three is not going to be at a distinct enough angle, that's where I am really starting to think that a hyperwave may not be the best fit, and would start to look at a pattern like Joe was pointing to, in terms of a parabolic curve, being just a little bit better fit. Let's see how I would be looking at this. We would need this one to connect here, and like something like off of there. And it's what I noticed was when putting together the parabolic curve on the weekly, it's pretty dang tough to do. And what interested me the most, which would be basically the most bullish thing that came across my plate, was some sort of monthly, like really higher time frame thing that starts off on this December 8th low. Because when in doubt, zoom out. So when it's really not working on the weekly either pattern, that's when I would zoom out and try to do something like this. And if you have a parabola, say on the monthly, opposed to a hyperwave on the weekly, that would be way, way more bullish. Higher time frame stuff is just that way. So, you know, looking at this monthly, I think anybody that's seen candles like this on the monthly chart just kind of remembers, like, I mean, that's just really, this is insane. We haven't really seen anything like this before. And a major correction would still have a lot of room to this parabola if we really zoom out and look at the monthly. You know, we could have some sort of, let's see here, say 40% correction back down to the 28K range from like 50. That just gives a nice bull flag sort of situation on the monthly back down to this parabola. So that's really what I'm looking at the most right now. And it's that's kind of like you with the Elliott wave. You just kind of use these things as a bit of a template. Support becomes resistance, and you know, yada yada yada. You start to look for some trend lines. Maybe you apply some rules like Elliott wave or hyperwave, but it's not going to be how you're going to be determining. Like I was very prepared to buy a pullback to this trend line, but it doesn't mean that I'm just completely caught with my pants down, you know, when that doesn't happen. So using that as a framework and a guideline for where I really, you know, want to be ready and prepared to buy. And then also just knowing what is going to be used to as either a backup plan or the main plan to signal the entries and exits is going to be a very good thing to do. And I'm really, you know, seeing some interesting things out of this. Let's see here. If, you know, if we just kind of connect these highs with that high or these lows with this low, for me, that's a very interesting sort of longer term parabolic structure. And the thing that I wouldn't like, which is the other option, would be a blow off top. And when you go in a V so in such a sharp angle so quickly, that's where the other option very much becomes a blow off top. Let's just pull up a example of that really quickly. We don't have an old chart of oil. I was definitely not meaning to bring up the one that goes to negative. That's for sure.
Well, you need those large candles to get to 200K by the end of the year. No, I'm just
well,
messing.
that's right. But yeah, so like here would be a blow off top, which we referred to in the book as, you know, not a parabola, not a hyperwave. It's more of this. It's also been referred to as a pipe top, where you just get the V-ish sort of structure. Oh, geez, that's terrible. But you get the point where it's just a upside down, you know, a V where it goes straight up and then comes straight back down, basically to where it started. And that's why you need corrections. You need healthy corrections for healthy markets. I guess maybe this was the real blow off top that I was looking for. Yeah, here's a monthly. Here's where you get that real V blow off top. Very common in oil, not as much in very many other things. So yeah, that's definitely something to be paying close attention to. And I will be you know, still very much, you know, not expecting a V top, expecting a parabola or some sort of, maybe even get a hyperwave on the higher time frame, like a monthly that hasn't had its correction to phase 2 yet. The traditional hyperwave doesn't quite make sense, and there's nothing. You know, I guess the point I'm trying to make is that this is a parabolic market that goes into bubbles, but if it doesn't fit into a hyperwave, then it's, you know, then it's something else. So that's kind of, you know, what I'm seeing now. Is I'll still be keeping a close eye, but I can't say, you know, definitely not definitively or confidently at all that it's in anything other than maybe just a phase 2 that just still hasn't developed yet. So that would be the conclusion there, and I will finish up by remind anybody or sharing with anybody that didn't see at the top the website that I'll have coming soon, where I will be back to doing daily live streams. I'm going to be putting together some big presentations that will be for free for people who are looking to improve their trading or investing through improving their risk management and better understanding what to use to trade, spot versus leverage, this sort of stuff, some indicators to use that are free, as well as sharing, like I would do back when I was, streaming daily. I can share basically, right where I'm looking to set my orders, where I'm looking to adjust them, where I'm looking to get stopped out, which is very nicely illustrated in EMASAR for the most part, but definitely have been making some improvements and continuing to evolve my own approach. And it will be great to be able to share that with everybody, as well as sharing my daily process. That's going to be the whole key for me, is that I think anybody that is going to succeed in the long term needs a very consistent process. When you wake up in the morning and the market's really moving, and it's going either in the direction you expect or didn't, your emotions are going to be running high. And if you don't have a process you can rely on, with tools that you can rely on, then it's not going to work out in the long run. I don't think so. So we'll also be excited to share the FOMO finder and the EMASAR backtester as soon as it is ready. And we'll be launching a forum to replace the Telegram chat group. We'll be phasing over there. It won't just replace right away, but many people ask for a link to Telegram and this and that has been private, but everything that I've been doing there and even more is going to be moved over to here, and that will be public, separate from the indicator that is still going to remain for a fee at $500 a year, which I've been getting a lot of really good feedback, and that's really great to hear, as has Fibbo Swanee and his threshold theory. Been hearing a lot of really good things. So way to go there. And anybody that wants a chance to win a signed Hyperwave book or a EMASAR hoodie can come over here and enter email and optional message, no confirmation required, and opt out anytime. I'm just trying to help, trying to provide value, and if you are going to be opting out, then that's fine by me. But if you are interested in the stuff I'm talking about, then you'll probably be wanting to get some updates. And something I'm excited about is to develop, just to start moving away from Twitter, YouTube, these places that are showing a strong propensity to censor people who share their opinion in a supposed to be a free market, free speech economy. So we'll be excited to launch that and really roll my sleeves up and get back to work with the daily streams. And we'll be certainly happy to have you guys on whenever you're around. But I know that that won't be something that you guys will be able to regularly do, but we will continue to come to you on Thursdays on YouTube as the Honest Analysts to share our weekly analysis, as we have been doing here for a while now, and that's been a lot of fun. So that will conclude a longer show than expected, but hopefully people got a lot out of it, and will be time for me to go comb my hair and get something to eat. It's been a long day, so I'll look forward to catching up with you guys all next time. And any last words from Fibbo or Joe? All right. Well, peace up and 8 down. Do, 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 do.